Are you thinking of retiring early? Do you believe in the future of digital currencies but don't understand how they work? Or what authority does this digital currency wield? Have you ever envisioned what retirement might be like if you had a sizable Bitcoin portfolio? If that's the case, this video is for you. Let's get started. After hearing stories of individuals making tens of millions of dollars from Bitcoin investments, it's natural to wonder if you can make your own windfall and retire much sooner or much more comfortably than you would otherwise. Cryptocurrency is a relatively new phenomenon in the world of investment, and some people have made millions by getting in early. Today, you may conceive of crypto in terms of the following key characteristics. Number 3 is accessibility. Starting to invest in Bitcoin is very simple. However, it's not as simple as placing stock trades on a brokerage platform. To buy coins outright, you'll need to create a crypto wallet, which is a multi-step procedure. If you want to mine coins, you'll have to build your own mining equipment, which takes a lot of technical know-how, or your willingness to join a crowd mining platform at the expense of some return on investment. Even yet, anyone can become engaged since there are so many different currencies to invest in and so many various methods to invest. Then at number 2, we have volatility. Many investors believe that cryptocurrency's greatest strength is also its greatest weakness, its volatility. Despite the fact that it's existed for some years, this is still a relatively new investment that generates both excitement and anxiety among its investors. For the foreseeable future, prices are likely to vary drastically, which means your little investment might be worth a fortune during a period of boom or lose nearly everything during a period of collapse. Lastly, at number 1 is its possibility in the long run. Economists are split on whether cryptocurrency will become a widely accepted method of payment. If it happens, you may expect a large increase in value and immediate access to a new form of spending. Any coin's long-term potential will be determined by whether or not it's embraced by mainstream buyers. So how do these characteristics fare as a retirement option? Finally, when it comes to retirement investing, there are 3 elements to consider. Number 3, long-term expansion. If you're more than a few years away from your desired retirement date, you should think about your investment's long-term growth potential. Ideally, you'll be able to multiply your original principal several times. As all of those Bitcoin billionaires can attest, there's a lot of room for crypto here, but nothing is fixed in stone. However, it's difficult to compare crypto to conventional investments because the S&P 500 and other industrial averages have such a long track record. We just do not know what the true growth potential is. Number 2, consistency. Consistency is crucial for those approaching retirement. You should be confident in your annual returns, and you may choose to take regular dividends as a source of recurrent income. Unfortunately, crypto cannot support you at this time. Popular coins do not pay out a dividend or guarantee an interest rate, and their growth isn't consistent enough to rely on for retirement income. Number 1, risk reduction. It's also critical for those approaching retirement to take less risks. Putting all of your money into one asset, even if it's performed well in the past, is risky. Instead, it's a better idea to diversify your assets and prospects so that no single loss will destroy you or you'll be exposed to a wide range of growth opportunities. This model can readily accommodate cryptocurrency. So the question now is Bitcoin a good investment for retirement? In most cases, personal savings will account for the majority of one's retirement income. Social security benefits are only meant to replace about 40% of your salary, so unless you have a pension or other fixed income source, you'll have to rely on your savings to cover the remainder. Because you'll most likely be relying on your savings to get by in retirement, it's critical that your assets remain steady. If the value of your stocks drops dramatically, you'll have less money in your retirement account, which might be harmful to your financial future. As a result, relying only on Bitcoin for retirement might be quite dangerous. Bitcoin is known for its extreme volatility, having lost more than 80% of its value in the past. While everyone's risk tolerance is different, few retirees would be able to sleep at night, knowing that their savings may drop by as much as 80% in a short period of time. Furthermore, no one can predict if Bitcoin will be around in a few years or decades. While it is possible that it might become a widespread form of currency in the future, this is not a given. If you put all of your money into Bitcoin and it falls, your retirement may be jeopardized. Now, let's look at how to invest in Bitcoin without jeopardizing your retirement. There's nothing wrong with being ready to get on the Bitcoin bandwagon. There are, however, less riskier alternatives to invest in Bitcoin without jeopardizing your financial security. First and foremost, be sure that you're spending a modest amount of money that you can afford to lose. The amount you invest will be determined by your financial condition and risk tolerance, but it should not be so large that you would be unable to pay your expenses if you lost all of your money. Next, check to see if the remainder of your portfolio is adequately diversified. Your entire investing portfolio will be less harmed if Bitcoin doesn't perform well if you distribute your money over a number of stocks from other industries. Finally, only invest in Bitcoin if you think it has long-term value. However, if you feel Bitcoin has worth and are prepared to keep your assets for years or decades despite possible volatility, you may gain a lot of money in the long run. Bitcoin is hazardous, and relying on it for your retirement is a bad idea, but that doesn't rule out the possibility of investing. You can protect your retirement while still increasing your savings by being careful about how and where you invest. Let's take a look at why Ethereum might be a good retirement investment. The first reason is because, aside from being crypto for the sake of crypto, Ethereum serves a definite purpose and has a well-defined use case. It addresses problems for a lot of developers by allowing them to create distributed, non-centralized systems that can't be taken down. Its smart contract implementation is second to none. Without a doubt, the most important component of the Ethereum ecosystem is this last use case. Self-enforcing contracts are promoted as a way for two parties to form contracts without the need for a third party. Ethereum is a revolutionary money-saving technology that can remove third parties such as banks, brokerages, and clearinghouses, in addition to being a solution to contract disputes. In addition, as the popularity of DeFi grows, so will the use of this platform, which can be used to create and exchange non-fungible tokens or NFTs. Second, several Fortune 500 businesses are already using the Ethereum network, including JP Morgan and MasterCard. Third, the EIP 1559 introduced a new function called coin burning, which removed coins from circulation once fresh ones were issued. It was putting a stop to Ethereum's ever-increasing supply without putting in place a supply ceiling. This, in turn, might have a significant impact on the price in the long run. The supply of Ether will be constrained by the burning of coins, resulting in scarcity and hence an increase in price. Best Bitcoin IRA providers. Individual retirement accounts, or IRAs, are a fantastic method to ensure financial stability in the future. The Internal Revenue Service (IRS) does not maintain a separate account for cryptocurrencies. As a result, when investors refer to a Bitcoin IRA, they are referring to a retirement account that holds Bitcoin or other digital currencies. A self-directed IRA is also known as a cryptocurrency IRA. Self-directed individual retirement accounts, SDIRAs, allow you to invest in assets such as real estate, precious metals, and cryptocurrencies that are not permitted in traditional IRAs. However, as global market volatility continues to rise, some investors are considering diversifying their IRAs with alternative assets such as Bitcoin and other cryptocurrencies. Given Bitcoins are a digital rather than a physical asset, cryptocurrency IRAs need specialized administration, enhanced data security, and extensive knowledge of crypto trading. We looked at over a dozen Bitcoin IRAs, evaluating their competence, security, experience, costs, and other factors. Here are a few of our favorites. Bitcoin IRA is regarded as the best overall option. iTrust Capital is the best place to go for the best rates and fees. If you're looking for the best investor experience, go no farther than Coin IRA. Bit IRA is the best option for security, and Equity Trust is the best option for self-directed investing. Regal Assets is the winner in the best variety of cryptocurrency supported category. Cryptocurrency is much too unpredictable to be relied on for a regular return, but its bright future and ease of use make it an excellent choice for diversifying your portfolio. It's irresponsible to expect cryptocurrency to make you rich or to rely on it entirely as an investment for your retirement, as this strategy is comparable to playing the lottery, but cryptocurrencies can help you experience more stable returns overall if they're a tiny element of a much larger diversified portfolio. That concludes today's video. Thank you for sticking with us until the conclusion of this video, and we'll see you in the next one.